Welcome back to Econverse, everybody. Today, we're going to be tackling a question that I know a lot of you have been wondering about. How has Russia been able to keep its economy, well, not just afloat, but actually growing during this whole conflict with Ukraine, it seems like, defying expectations, defying a lot of the predictions?
It's definitely a bit of a head scratcher, isn't it? Like on the surface, it doesn't really add up. But,
Yeah.
for this deep dive, the sources you've pulled together, they give us a really solid foundation to start picking this apart.
That's exactly what we need because honestly, this is not a simple issue. Like, we can't just look at GDP numbers and be like, oh, look, Russia's doing fine. We need to go deep. We need to figure out like what's really driving this. What are the specific areas of the Russian economy that are actually seeing growth?
Mm.
What role are countries like China and India playing? And what's changing, like fundamentally changing within Russia's economic structure itself?
Okay, so let's rewind back to February 2022.
The full-scale invasion of Ukraine kicks off, and the pretty much universal prediction, like across the board, was that sanctions were going to hit the Russian economy, like hard, like really hard.
Yeah, I remember those days. It was all over the news. Like Russia's economy is going to crumble.
Yeah.
There's a lot of talk about how the economic pressure would force them to back down. Exactly. And then, we look at the data and it tells a different story. It really does. Instead of just collapsing, Russia's economy contracted, sure, a little bit in 2022, but then it started to grow again in 2023. And the forecast, they're showing more growth for 2024. It's like, what's going on?
Okay, but there are a lot of different opinions on this, right? I heard some people say, like, see, the sanctions totally backfired. They didn't work at all.
You got it. That's one side of the coin.
No.
And then you have the folks who are like super pro sanctions, arguing that any growth that Russia is reporting is basically made up. Like they're cooking the books and the real economic damage is way worse than they're letting on.
So we have these two very extreme viewpoints, and then we have our mountain of sources here. What's the more realistic picture?
Well, let's be real. Russia's classified a lot of its economic data since the war started. Makes
Right.
sense, right? But the stuff that is out there that's publicly available, it does seem to have some internal consistency. And what's even more interesting, I think, is that it often lines up with what their trading partners are reporting. Like, if Russia says they exported this much oil, well, we can look at India's import figures and see if it matches up, right? Same thing with salary data from Russian job websites, even retail sales. It's like piecing together a puzzle, and it's not a totally chaotic mess.
I never thought of it that way. It's like you're doing a cross-reference check on their data. Makes sense. So I guess maybe we can't just say that all Russian economic data is fake news.
Right. But, and this is a big but, pretty much all of our sources are pretty loud and clear about one thing. This whole, Russia's doing okay thing. It's built on some shaky ground. They're taking on some serious risks, making some big bets that could backfire down the line. One report even calls it a mortgaged future, which I think is a pretty striking way to put it.
A mortgaged future, huh? Okay, I'm intrigued. So let's talk about what's actually driving this economic stability, even this growth that we're seeing in the short term. What's the first big factor?
Government spending, my friend. They've been pumping a ton of money into the economy, and they're doing it in a bunch of ways. Huge state contracts, direct payments to businesses and individuals, even more social welfare spending. It's like they turned on the money faucet, and that's got to have an effect, especially when it comes to things like, hiring people to support the military and the whole war effort.
That seems logical. If the government's spending like crazy, it's going to stimulate things, at least in the short term. What's the next piece of the puzzle?
Ah, this one's juicy. SIPA calls it authoritarian friendshoring of trade. Basically, they've shifted their trade relationships big time away from the West and towards countries that aren't, trying to sanction them to oblivion. Think China, think India.
We hear about those relationships all the time, but just how important are they really?
Super important, like game changer important. China's become like Russia's lifeline. They're the ones helping them import all the stuff they can't get from the West anymore, especially those high-tech goodies, semiconductors and microelectronics, which are like essential for making modern weapons. And get this, the Chinese yuan is becoming a major player in Russia's international transactions. People are even starting to save their money in yuan. I mean, that's a huge shift, right?
Yeah, the yuan's rise, that's a whole other geopolitical story we could unpack in another episode. But okay, so China's the big player here. What about India?
India's buying up tons of Russian oil, way more than before. Before the war, they were only getting about 1% of their oil from Russia. Now it's closer to 35, maybe even 40%. That's a massive revenue stream for Russia, especially when you consider that Europe's been trying to wean themselves off Russian energy.
So new friends, new trading partners. It's definitely helping Russia weather the sanctions storm. What's the third big factor that's contributing to this resilience?
Okay, this one might sound a little counterintuitive, but it's import substitution. So over 1,200 foreign companies have pulled out of Russia since the war started, which, on the surface, sounds bad, right? Less choice for consumers, damage to Russia's reputation in the international business community, all that. But here's the twist. It's actually created opportunities for Russian companies. Less competition, more profits, more demand for their homegrown products and services.
So sanctions kind of backfiring again, in a way.
Yeah, kind of. It's like they tried to shut them down, but it opened up some new doors. In the first quarter of 2024, profits in finance and insurance more than doubled. Tourism, get this, saw a 52-fold increase in profits. Now, that's probably mostly internal tourism, right? Because people can't travel as easily internationally anymore. And construction, boom, 41-fold increase. That's got to be all those state-funded projects and military stuff. And you know what the government's doing? They're taking a cut. Windfall taxes in 2023, a big tax hike in 2024. Got to capture some of that extra cash flow. Plus, with capital and people kind of stuck inside the country, domestic demand is strong. More tax revenue there, too.
So we've got the government spending spree, the new trade alliances, and this unexpected boost to domestic industries. It's starting to make sense how they're managing this, but I got to ask, how big of a role is military spending playing in all of this?
It's the elephant in the room, right? Military spending is absolutely key to understanding what's going on in the Russian economy right now. All our sources, they're pointing to massive investments in everything military, the industries making weapons, the effort to make stuff domestically that they use to import, the new infrastructure projects, especially the ones aimed at boosting trade with China because, China's got the components they need. It's all connected.
So in a way, this economic growth that we're seeing, it's almost entirely fueled by the war, right?
Yeah, I think that's a pretty accurate way to put it. Without this huge military spending, the Russian economy would likely be, stagnant or even shrinking. And we're seeing some crazy production increases, too. Some facilities are making twice as many armored vehicles as before. Ammunition production up 5 times in some places. And they're churning out these military drones like nobody's business.
Wow, that's a lot of firepower.
Yeah.
How does this all translate into budget terms?
Well, officially, they're spending about 7% of their GDP on defense. That's already a lot. And next year, projections are saying it'll be over 41% of the whole state budget. That's huge. But here's the thing. The real spending is even bigger than that. Because, you've got all these internal security troops, almost 560,000 of them, and then you've got all those private military companies like the Wagner Group. And a lot of that funding, it's off the books, not part of the official defense budget.
Okay, so we're talking serious money being poured into the war effort. So with all this going on, what's the impact on the everyday Russian people? What's happening with jobs, salaries, consumer spending, all that stuff?
Big changes there, too.
Yeah.
And it's not all bad, at least
Yeah.
on the surface. So you had this huge wave of emigration in 2022, a lot of skilled workers leaving, and then you had fewer migrant workers coming in. So the workforce shrunk, right? Supply and demand, basic economics, wages went up.
Yeah, we've heard about those labor shortages in Russia.
Mhm.
But how much have wages actually increased?
Quite a bit. In March of 2024, nominal salaries were up 21.6% compared to the year before. Real salaries, that's after taking inflation into account, they were up almost 13%. It's calmed down a bit since then, but the government's still saying real wages will keep going up.
So people have more money in their pockets. What are they doing with it?
Spending it, saving it, the usual stuff. It's interesting, though, because the central bank has raised interest rates, trying to cool down inflation. But consumer lending is still higher than it was before the war. And car loans, they're getting bigger, too. Must be those rising car prices.
So high interest rates, but people are still borrowing. That seems a bit odd.
Right, it is. There's a new group of borrowers emerging, people with higher incomes who are, playing the system. They're earning more on their savings because of the high interest rates, and then they're borrowing at relatively lower rates to buy stuff. And then you have people who, maybe didn't have the best credit before. They're suddenly considered more creditworthy because of the overall economic climate, so they're taking out bigger loans, even with the higher interest rates. It's kind of a weird dynamic.
Definitely not what you'd expect. Yeah. Okay, so we've covered trade, industry, consumer behavior. What about investment? How has the war and all these sanctions changed the way people are investing in Russia?
it's changed dramatically. Basically, foreign investment has dried up, right? Who wants to invest in a country that's at war and facing all these sanctions? But Russian companies are making more money, so they have more capital, and they can't really take it out of the country that easily. So what do? They invest it domestically. It's like
Hmm.
this forced internal investment. Spending on new construction and equipment was at a 12-year high in the first half of 2024. That's a 10% increase compared to the previous year. And in 2023, investment actually grew faster than the overall economy. It's a mix of state-funded projects and private sector investment. Plus, the government has made it harder to move money out of the country, so that keeps capital trapped inside.
It's like the sanctions. They're accidentally boosting domestic investment. Who knew?
Right. But we got to remember what they're investing in. A lot of it is war-related stuff, weapons factories, infrastructure to help them trade with China. It's not necessarily the kind of investment that's going to build a diverse and sustainable economy in the long run.
Exactly. And speaking of sustainability, with all this spending and economic activity, how's inflation looking in Russia?
Inflation's a big problem, and it's getting worse. You've got all this wartime production and import substitution. When you try to make things yourself instead of importing them, it's not always very efficient. And the shrinking labor force, it's all adding up to an overheated economy. The central bank's trying to cool things down with those high interest rates, but it's not really working. Wages are going up, there's less capacity to make consumer goods, and prices are rising.
So even with the growth, they're dealing with some serious underlying problems. Okay, let's zoom out a bit and talk about the long term. What are the big economic risks that Russia's facing?
There are a few major ones. First, their current growth model just isn't sustainable. It depends too much on military spending and selling raw materials like oil and gas. And the sanctions, they're making it harder for Russia to keep up with technology. They can't access the latest and greatest stuff, so they're falling behind.
That military spending thing, that seems like a ticking time bomb. Like, what happens when the war ends?
Exactly. Foreign policy talks about this. They say if Russia cuts back on military spending even a little, it could trigger a recession. Imagine all those soldiers and defense workers suddenly unemployed. That could cause some serious social and political problems. And history's full of examples of that happening after big wars.
Okay, that's scary. And what about the labor force? We talked about how it's shrinking, but how big of a problem is that in the long run?
It's a huge problem. They've lost a lot of skilled workers, and their population isn't growing. Russia's becoming more and more xenophobic. They're making it harder for immigrants to come in, which could have helped fill some of the gaps. And they've never really invested enough in education and training, so there's a shortage of skilled workers across a lot of industries. It's a mess.
So we've got all these long-term risks. Any historical parallels that can help us understand where this might be heading?
Over-reliance on military spending, selling low-tech stuff, high inflation. Sound familiar? It all led to economic stagnation for the Soviets, and it could happen again in Russia. Plus, they're so dependent on just a few Asian countries for trade now. What if those relationships go sour? It's a risky strategy.
And it's not just these big long-term risks, right? They're dealing with some more immediate problems too.
Right, like the tight labor market, it's starting to hurt businesses, especially those that aren't connected to the war effort. They can't afford to pay those high wages that the defense industry is offering. And this unequal wage growth, it's making regional inequality worse. It was already a problem, but the war has made it worse. And the government, they're still not investing enough in workforce development, so it's a vicious cycle. Maybe they're a bit too optimistic about how strong their economy really is. Like they're still spending like nothing's wrong. But that might not be sustainable if things start to go south.
Okay, let's talk about sanctions again. We touched on them earlier, but they're obviously a huge part of this whole story. What's the bottom line? How much have they actually hurt Russia's economy?
Russia's been making deals that seem good in the short term, but they could have really bad consequences down the road. And the sanctions have definitely forced them to make some of those deals. They can't get a lot of the high-tech stuff they need. And they've lost access to some important markets, especially for natural gas in Europe. Bloomberg Originals talks about that in detail. But Russia's found ways to adapt. They're selling more energy to China and India, and they're using other countries to import stuff, bypassing some of the sanctions.
What about those oil price caps?
Mm.
Has been effective?
Well, they've definitely had an impact on how much money Russia's making from oil, especially when they first went into effect back in 2023. Wikipedia has a good summary of that. But Russia's still exporting a lot of oil. The U.S. Treasury thinks sanctions have shaved about 5% off of Russia's potential economic growth over the past 2 years. Not nothing, right? But the general consensus from all these sources is that sanctions, at least the way they are now, haven't really been enough to force Russia to change course in Ukraine.
So sanctions are working, but Russia's finding ways around them. And we can't forget about the big picture, the geopolitical situation. How does that factor into all of this?
This is the biggest war in Europe since World War II. This is a game changer, and it's going to have a huge impact on the whole global order. And remember, we sanctioned Russia for over a decade before the full-scale invasion, and it didn't really stop them from doing what they wanted to do. They're trying to redraw the map of Europe, and they're willing to spend a lot of money to do it. That has huge economic implications.
So it's a lot to take in, right? We've gone through all these sources, and the story that emerges about Russia's wartime economy, it's not black and white. It's not just they're collapsing or they're unstoppable. It's much more nuanced than that. They've intervened in the economy in a big way. They've shifted their trade relationships, and they've doubled down on military production. And yeah, it's created some stability, even some growth in certain areas.
The long-term vulnerabilities are real. They're spending too much on the military. They're falling behind technologically. Their workforce is shrinking. These aren't problems that are going to magically disappear when the war ends. This growth they're seeing now, it's not sustainable.
It's like they're kicking the can down the road, but eventually they're going to hit a wall. So the big question is, can they transition out of this war-driven economic model?
Yeah.
Or will all the choices they've made, all those Faustian bargains, come back to haunt them and lead to the stagnation that a lot of experts are predicting? It seems like Russia's bought themselves some time, but the long-term consequences of this conflict, they're going to be massive no matter what happens. And on that note, if you enjoyed this deep dive into the complexities of Russia's economy, please do us a favor and share with your friends. And while you're at it, why not subscribe to Econverse on whichever platform you're listening to us right now? We're always here to explore the forces shaping our world, one fascinating economic puzzle at a time. Thanks for listening.